Welcome to the Deep Dive. We're here to help you get genuinely well-informed, especially today, on something really vital. Strategic business leadership. We're not just, listing facts. We want to pull out those insights that really matter in the complex world of business. Our mission, to unpack what really makes a strategic leader tick, and importantly, those essential professional skills you absolutely need. We're digging into materials actually used to train future leaders.
Exactly. And this isn't just academic stuff, not dry theory. These are practical skills, things employers are actively looking for right now. And it doesn't matter if you're aiming for the top job in a huge company or, say, advising a small family business. These capabilities, they're critical everywhere.
Speaking of family businesses, we have a really interesting case study later. A family farm facing massive uncertainty, and they're considering this surprise move. A golf course. We'll see how all these ideas, these skills play out when, real livelihoods are actually on the line. Okay, so we've set the scene, but let's get down to it. When we say strategic leader today, what does that actually mean? What does it look like? We're seeing roles change, aren't we? Even traditional ones, like accountants, their role is shifting way beyond numbers now. They're becoming advisors, leaders.
At its heart, strategic leadership is about, future-proofing. It's not just fixing today's issues. It's like being able to see the big picture, the master plan, but also knowing how to handle the details, the day-to-day stuff. It's that mix of vision and detailed ethical analysis. Using data, yes, but to build solutions that actually last, sustainable solutions.
So seeing beyond the immediate horizon, that's key. And when you think strategically, it seems like there are a few core characteristics. First, that long-term perspective you mentioned, not just next quarter, but, years down the line. How do today's choices affect the future? What's the risk if companies don't do that?
Oh, the biggest risk. Focusing only on short-term wins. You miss big threats coming over the hill or fail to adapt when the market fundamentally shifts. Happens all the time. Second, strategic thinking means looking at the whole picture, the entire organization, not just this product or that division, but how everything connects, how it all works together, or sometimes how it doesn't.
Right, seeing the whole ecosystem. Makes sense. And third, setting the direction, the overall path for everyone.
Exactly. Setting the direction and then integrating activities so everyone's pulling the same way. Fourth, and this is crucial, actively considering all the stakeholders, not just the shareholders, employees, customers, suppliers, the community. Their views matter.
And then there's understanding your resources, what you have, what you need.
Yes, analyzing resources, defining requirements. And finally, relating the organization to its environment. Understanding trends, competitors, regulations, all aiming for that sustainable competitive advantage, that edge that lasts.
Can you give us some examples? Make it a bit more concrete.
Sure. Imagine a division wants to launch a cheap product. Strategically, you have to ask, will this damage our main brand? The high-quality one we've built up. Maybe it needs a totally different brand name. Or think about ethics. A project promises great returns for shareholders, fantastic NPV, but it pollutes. A strategic leader has to face that dilemma squarely. Or another one, a company known for selling to, say, middle-aged people suddenly wants to target teenagers. Big shift. Is their brand flexible enough? Can they even connect with that market? Most big business challenges, you find, have the strategic layer. You can't just treat them as isolated incidents. You need that broader view.
It really is about seeing that bigger picture, making those integrated choices, not just quick fixes. Like you said, building a resilient ship, not just patching leaks.
Right.
Okay, so that's the mindset, the what's. But how do you actually do it, the how? This brings us to those 5 critical professional skills employers want, the ones that go beyond just technical knowledge.
Right. And these skills, they're fundamental. They show leadership. They're not like a separate checklist item. They're woven into how you tackle problems, how you answer the requirements you're given. They affect everything. And just to note, all 5 skills are typically tested with marks allocated to them within specific requirements, usually around 2 to 4 marks per skill per requirement.
Okay, let's break them down. Skill number 1, communication. What makes communication effective in the strategic sense? Got to be more than just being clear, right?
Oh, much more. A common mistake is just broadcasting information without thinking about the audience. Strategic communication is about, shaping understanding, driving action. It's about making complex things clear, yes, but also making your message stick, persuading people, influencing decisions, not just informing about them.
So that user focus is key. What are some of those critical questions you need to ask about your audience before you even write a word or prepare a slide?
You absolutely have to ask yourself, Who are these people, really? What are their main concerns likely to be? Why did they ask for this report or analysis in the first place? What arguments will actually persuade them? Not just what persuades me, what level of technical jargon is right. Too much, you lose them. Too little, you might seem superficial. And crucially, what do they already know? Don't waste their time.
It's like professional mind reading almost.
Kind of. And you also need to pick the right medium. A detailed report, a short letter, presentation slides. If it's slides, you have to be ruthless. Pick the absolute key points, prioritize them, maybe 5 points max per slide. Put the extra detail in the notes you speak to. Keep it punchy, digestible.
Okay, makes sense. Moving on from communication, the next one, commercial acumen. This one feels a bit fuzzy sometimes. How do you build that kind of business sense if you haven't, spent 20 years in 5 different industries?
It's true, experience helps immensely. But acumen is really about awareness beyond your immediate job, sensing market shifts, understanding those external forces, economy, regulations, tech changes. It's using judgment to spot the real issues in a problem, having insight into how the organization actually works, the politics, the conflicts, and navigating those to find workable solutions. And the best way to fast-track this, wider reading. Seriously, read good newspapers, industry journals, reputable online sources.
Not just reading passively, right? You have to engage with it.
Exactly. Ask yourself, why did that company make that decision? What factors were at play? And critically, did it work out? Why or why not? What could they have done differently? Treat every article like a mini case study.
Okay. So you're actively analyzing as you read.
Yes. And if you can bring those real-world examples, those insights into your own work, your own analysis, that gets noticed. It shows you're thinking bigger.
Right. Which leads nicely into the third skill, analysis. This sounds straightforward, but you're saying it's more than just describing what's going on.
Oh, much more. Analysis means digging deep, examining the details to find the underlying meaning, the essential features. It often involves breaking things down, maybe doing some calculations, looking closely at the data. But then, and this is vital, stepping back to see the bigger picture, identifying patterns, themes, insights that the data reveals. Things that support your conclusions.
So you probably won't just be given a specific model like SWOT or PESTLE and told, fill this in.
Yeah.
You need to figure out what's relevant.
Precisely. You need to identify the key data, choose the right metrics or tools for the job, and always ensure your analysis has a purpose. Are you trying to find the root cause of a problem? Assess a new opportunity? Justify a recommendation? The analysis must serve that goal.
Can you contrast analysis with description? Maybe with an example.
Sure. Let's take company structure. Just saying, they have a functional structure, that's description. Analyzing it means asking, why do they have it? Maybe it was set up years ago for a simple product line. Context. Is it still appropriate now they've diversified? What are the consequences? Is it causing silos, slowing down decisions? Maybe they need a divisional structure now. That's analysis. And with numbers, it's the same. Don't just present tables of figures, you have to interpret them. What do these trends mean? Why did sales drop? What are the implications? Draw conclusions. Tell the story behind the numbers.
Got it. Skill number 4, skepticism. Sounds a bit negative, maybe.
Yeah.
But you're saying it's essential for leaders?
It sounds negative, but it's really about critical thinking. Professional skepticism. It's the ability and the willingness to probe, to question, to challenge what you're told or what you read. It's about digging deeper to really understand the issues, to establish facts objectively, always grounded in professional ethics, of course. Basically, don't just accept things at face value.
Okay, so in practice, that means maybe looking for gaps or weaknesses in how a company is run, governance issues, or not just blindly believing something because the senior director says so, especially if it sounds a bit optimistic or self-serving.
Absolutely. And questioning the data itself is a big part of it. Who put these numbers together? Are they competent? Biased, maybe? What's missing? Why was this data produced now? What assumptions underpin it? Are those assumptions realistic?
So healthy questioning.
Healthy professional questioning. And importantly, there's an ethical angle. And tact. If you're challenging a senior manager, you need to be professional. It's better to suggest, say, that forecast growth rates might be somewhat optimistic given market conditions and back it up, rather than blurting out, you're deliberately misleading us. Professional inquiry, not accusation.
Right. Tact is key. Okay, the final skill, number 5, evaluation. This feels like where everything comes together. What's evaluation really about?
It really is the culmination. Evaluation is about carefully assessing everything, situations, proposals, arguments in a balanced way. It involves using your professional judgment, your ethical compass to predict likely outcomes and consequences. And all of this serves as the foundation for making sound decisions, choosing the best path forward.
And balanced is a key word there, isn't it? You mentioned looking at financial and non-financial factors.
Exactly. A balanced argument considers both. It looks at the needs of all those stakeholders we talked about, not just shareholders. It weighs up risks and potential returns.
Can you give an example of that balancing act?
Sure. Let's say Project A has a higher NPV, net present value, a key financial metric, than Project B. Financially, A looks better. But what if Project B is much better for the environment? Maybe it significantly boosts the company's green credentials, which customers and employees increasingly care about. Does that change the decision? Evaluation forces you to consider that trade-off. It also means thinking about implementation. Is this proposal actually feasible? Do we have the resources, the money? Can we realistically hit the deadlines? Evaluation brings in that practical reality check.
And prioritization must be part of evaluation, too. You can't give equal weight to everything.
Absolutely critical. You need to weigh the points, focus on what really matters, quality over quantity. How do you prioritize? Well, ask, is this issue strategic or just operational? A new competitor versus, say, the office air conditioning failing. Clearly different levels of importance.
Urgency matters, too, presumably.
Yes, how urgently do we need to respond? Think CEO resigning versus a minor product tweak. What's the potential impact, the materiality? How likely is this risk to actually happen? Are there big ethical issues involved? And importantly, how relevant is this point to the core question we're trying to answer?
That's a great checklist for prioritization. Okay, so we've got the mindset and the 5 skills. Let's put it all into practice. Let's look at this McDonald farm case study you mentioned.
Right, so the situation is this. Ken and Jane McDonald own a 1,200-hectare farm in a place called Florentinia. They raise lambs, grow fruit, vegetables, sugar beet. Pretty standard mixed farm. But their profits are falling, averaging around $180,000 a year recently. And the main reason? Pressure from the big supermarket chains squeezing their prices.
And then there's this external bombshell. Flexit. Florentinia is leaving its economic union. That sounds like massive uncertainty.
Huge uncertainty about future trade deals, tariffs, access to their usual markets, new competition, and a big one for farmers. The loss of subsidies that were based on farm size, that's a direct hit to their income.
Wow. So the supermarkets are squeezing them, and their whole trading environment is about to potentially change dramatically.
Exactly. You've got the strategic threat from the powerful supermarkets, plus this massive cloud of Flexit uncertainty. So the big question is, does McDonald Farm even have a sustainable strategy for the long term? The core problem they need to solve is how to reduce all this uncertainty and create a more reliable, less risky income stream.
Okay, so facing that challenge, applying some commercial acumen maybe, what have they come up with?
Well, Ken McDonald's idea, his strategic proposal, is to investigate using about 200 hectares, a chunk of their land, to build a new, exclusive 18-hole golf course.
The golf course. That's quite a pivot from farming.
It is, but their initial research looks promising. They think they can get planning permission, and demand seems strong, apparently. There are waiting lists of over 350 people at the 2 existing golf clubs nearby, so there might be a gap in the market.
How would analysis come into play here? What should they be digging into beyond just demand seems strong?
Oh, loads. They need detailed financial projections, realistic costs to build and operate it, credible revenue forecasts based not just on waiting lists, but actual demographics, price points, potential membership numbers. They need to analyze the competition properly. What do those other clubs offer? What are their weaknesses? And analyze the risks specific to this venture. What if construction costs spiral? What if membership take-up is slower than hoped?
And the family actually drafted their own list of pros and cons. How does a strategic leader use evaluation to sort through that list?
Right, and this is where you separate the strategic from the operational. Their list probably includes things like Flexit uncertainty and supermarket power. Those are the big strategic issues driving this whole idea. But it might also include things like potential noise during lambing season, or need new gates, weed killer drift onto vegetables, road damage from more cars.
Those sound more operational day-to-day concerns.
Exactly. They're important, yes, but they're secondary to the main strategic question. Is shifting resources from farming to golf a viable way to secure the family's long-term future given the huge external pressures? Evaluation means focusing on that core question first.
Okay, so the proposal involves setting up new companies. A bit complex.
A little. They're thinking Callum Golf Club Ltd. would lease the land from the existing McDonald Farm Ltd., and another company, Tarpon Clubhouse Ltd., would run the clubhouse facilities.
And the money side, how does that work for the McDonald's?
The plan is for the golf club company to pay $50,000 a year in rent back to the farm company. Plus, Ken and Jane would personally invest $40,000 each into the project's loan stock that's part of a larger $2 million loan being raised. That investment is expected to pay them $6,000 a year in interest.
Okay, so let's put on our evaluation hats again, thinking about risk and return specifically for the McDonald family. How does it stack up?
Well, they've looked at a couple of scenarios. Best case, or even just hitting break even, which they calculate needs about 600 members paying $1,000 each, plus income from the clubhouse and green fees they expect to get a steady $56,000 a year. That's the $50 hay rent plus the $6K interest.
And the downside? What if it doesn't hit break even?
Their analysis suggests that even if membership falls short, they should still receive that $56,000 rent and interest, unless things go really badly. And importantly, their liability is limited to their share investment. They wouldn't personally owe the golf club's debts beyond that.
But there were uncertainties you mentioned. What if the rent or interest can't be paid?
That's the remaining question mark. Could the golf company go into receivership? Could the McDonald's get their land back easily if rent isn't paid? And those debentures, the loan stock they invested in, what assets are actually backing them up? If the golf club failed, would they get their $80,000 back? These are crucial unknowns.
So the initial financial assessment seems positive. Potentially higher return than farming, maybe lower risk?
On the surface, yes. The preliminary conclusion is that, financially, it looks like a better bet than continuing solely with farming under the current pressures.
But here comes the skepticism skill again, right?
Absolutely. Before jumping in, that skepticism and deeper evaluation are vital. The final recommendations must include: clarify the legal position. What happens to the land and clubhouse if rent defaults? Get that in writing. And find out exactly what assets, if any, those debentures are secured on. This is drilling down beyond the rosy projections to understand the real risks if things go wrong. That's applying critical thought.
Okay, let's wrap this up. We've covered a lot. To recap, strategic leadership.
It's not just a job title, is it? It's a way of thinking, a set of skills.
It's a whole mindset, seeing the world differently, analyzing complexity, making decisions that have real impact, and consider the long view.
And those 5 professional skills we discussed, communication,
Commercial acumen.
analysis,
Skepticism.
and evaluation, they're all linked, all essential for navigating the messy reality of business today. Completely. Whether you're advising a giant corporation or, like the McDonald's, a family farm facing massive change, these skills are the bedrock of effective strategy and leadership.
So the question for you, listening now, is how can you apply this? Think about a decision you're facing, maybe big, maybe small. Could applying one of these lenses, questioning an assumption, using skepticism, thinking longer term, considering all the stakeholders with evaluation, could that change your perspective? Could it lead to a better outcome?
Because ultimately, the best leaders don't just react to problems. They anticipate them. They question the status quo. They build resilient, sustainable paths forward, always, always keeping that bigger picture in mind. That bigger picture in mind. That bigger picture in mind.